Welcome back. Just 13 points away from the record high on the Nifty. It's at 18,591. You're also getting updates as to which stocks have really moved around in 2020 from the lows actually. And we've been talking about which sectors have done well and which have not. So we'll keep continuing that conversation. But for now, let's talk insurance as well. We have the IRDAI chairman who spoke to my colleague Yash Jain, Debashish Panda, who spoke to CNBC TV 18 on a host of issues like nods to new insurers, composite licenses, removal of preference in reinsurance and lower capital as well. Yash is joining us now with the key takeaways from that conversation he had with IRDAI. Yash, take it away.
Well, that's correct, Sonal. So insurance sector has been one which has been in the middle of a lot of regulatory changes. I had a long interaction with the chairman, about 30 minutes, and for the benefit of our viewers, I've decided to sort of, put together the major headlines or the major reforms which the chairman spoke about. I'll start with the vision itself. The IRDAI chairman has said that they are moving forward with a vision of doubling insurance penetration in the next 5 to 7 years. Now, insurance penetration is essentially your premium to GDP, which means if it's going to double, which means the premium collected by insurance companies also is moving ahead with a vision of getting doubled. This is positive for all life, all general insurance companies. The next one, solvency requirement for the ULIP category for life insurance companies has been reduced. This is expected to free up about 2,000 crore for the life insurance sector. Apart from that, solvency for the crop insurance business, that has also been reduced on the regulatory front. That is expected to free up about 1,500 crore for general insurance companies. Next one, the insurance regulator has released a draft consultation paper on expenses of management and commissions. The regulator in the interview to us said that he's hopeful that the latest sort of consultation paper which has come will be acceptable for all companies, which means there is a strong possibility that it will be taken up in the next board meeting. This is also positive for all life general insurance companies as well as account aggregator, insurance aggregator like PB Fintech. Apart from that, on the approval side, the regulator said that Credit Access is very close to getting its approval. In the next 15 days, they'll get the initial capital. By next board meeting, they'll get the final approval to start insurance business. That is positive for that company. Also, going forward, it is possible that life insurance companies will be allowed in the health insurance segment, indemnity health insurance segment. This is positive for all life insurance companies as it opens a new business stream for them. Composite insurance, also a license is likely to be given up. The suggestion has gone to the government from the regulator, which means it just changes the whole game. It allows life insurance companies to operate in general insurance companies to operate in life insurance, increasing the penetration and benefiting all players. Finally, one negative which came, the insurance regulator said that a committee appointed by the regulator has recommended complete removal of obligatory premium going to GICRE. GICRE gets a fair amount of money from this obligatory premium, and that has been suggested to be removed completely.
All right, Yash, thanks very much for that. So just about 10 points away from that lucrative 18,600 odd mark. So let's see when we get to that level. But nonetheless, the Sensex is already at all-time highs. The Bank Nifty has been sitting at fresh highs. So the momentum is really here to stay for the markets at this point in time. Remember, FPIs have pumped in around 30,000 odd crores in the month of November itself. So there's